Welcome to Angel Impact, the official podcast of the Wisconsin River Business Angels. Episode 13, The Impact of Angel Investing, Part 1. Hello, my name is Aaron Marks, and I'm here with the latest episode of Angel Impact. Angel Impact is the official podcast of the Wisconsin River Business Angels, otherwise known as the WRBA. And the WRBA is the only angel investing group in central Wisconsin. And I'm here, as always, with the leadership team of the Wisconsin River Business Angels. I'm here with President Jeff Ebel. How are you, Jeff?
I'm fine, thank you.
Great. And I'm here with the chair, Leon Ostrowski. How are you, Leon?
Just fine.
Great. So we thought it'd be a good time to do an episode about sort of a general overview of angel investing. And we've done episodes that kind of speak about angel investing on a general level before, but that was kind of more about the technical process. And here we're going to talk about just generally what it is, how it works, the impact that it has on the economy and society, and just kind of a general overview and understanding of it, so that people can really understand why it's important, what it does, the effects that a lot of people just miss on a day-to-day basis. So we're going to jump into that. So the first thing we wanted to tell people about was, you guys say angel investing is kind of a full contact investing, is sort of what you say. So what does that mean exactly? Jeff, you want to take this one?
Sure. When I say full contact, I mean, be prepared to get your hands dirty. You don't have to. There are some individuals that prefer not to. They just want to use angel investing like any other type of investing. They want to put their money in what they think is a good bet. And that's it. And they want to wait and eventually get the return. But I would say that the rule, generally the people that get involved in angel investing are those that have been successful in their lives, in their careers, and they want to be there to help other companies be successful as well. So that's not only financial support. I think the greater value that they can offer beyond the financial support is providing some guidance, some mentoring, some coaching for young entrepreneurs. The other thing they have that, again, a lot of young entrepreneurs don't have is connections, because they haven't had time to develop those relationships. They haven't had time to develop a network. And those are extremely valuable to a young entrepreneur. It can take many, many years for them to develop it, or you can get connected with the right group of investors that have those connections already, and you can jumpstart it. So if you're going to be an angel investor, if you like to be involved, this is the best way to participate in helping these young entrepreneurs grow their businesses. And that means that you probably sit in at board meetings. You might participate in some strategic planning sessions. You can give guidance on finance and funding and just all kinds of areas of expertise that you can provide. So it's basically, when I say full contact, you get in there and you're going to get your hands dirty, and that's, I think that's probably one of the intriguing factors of angel investing.
Yeah. Leon,
I was going to say another dimension of these angel investors is that they were entrepreneurs earlier in their career. Yeah. And that may have been the source of the money that they're now investing in your firm. Mm-hmm. So they've had the school of hard knocks, let's put it that way.
Right.
They have a way to figure out how to go around, over and above the barricades that you're going to find in every opportunity.
That's right. Yeah. So it's like having experience at your disposal, not just capital. And before we started recording here, you guys were talking about the show Shark Tank, the really popular show that's I think put equity investing in the public light, and taught a lot of us about the nuts and bolts of that process, what it's like to go and pitch something and get investors in your corner. And something that you guys were just saying is that you wish they would spotlight a little bit more how important it is to get not only the investors' capital, but to get their experience, their knowledge, their networks, and that you just wish that was highlighted more, because just to pick up on one thing you said, it's actually that stuff that's as valuable, if not more, than the capital. So,
Mhm.
yeah.
Yes.
So next, we wanted to get into some kind of maybe a couple technical distinctions, just so people can better understand where angel investing exists on the continuum of finance. So, private market versus public market. Can someone explain what that means?
Go ahead, Leon.
The private market is what we have when we talk about angel investing. It's private, it's between parties. They're usually individuals that are not stockbrokers. That's the public market. Those are the place where you buy stocks, and they have the SEC, the Securities and Exchange Commission, and a lot of other government regulations that can control what you can sell, how you can sell it, what you can say when you sell it, where there's an awful lot of constraints. And those are the big companies. That's where you have the stockbrokers, the Merrill Lynches of the world, and others that are supplying most of that through salesmen and brokerage firms. Where you go to private equity, those are the smaller startup sources of funding, which does not require all this regulation. They say, if you have $1 million of net worth, you can be an investor. And they're saying you're a big boy when you have $1 million net worth. You don't have to have all these guidance there. You make your mistakes and you invest and you suffer the consequences, both positive and negative. Where with the little guys, which are mainly those buying stocks, they're trying to protect that individual. So that's the public market versus the private.
Yeah, no, I thought that was a clear and very good overview. Jeff, anything to add to that? Clear
No.
enough. Okay. Yeah. So then,
Good job, Leon.
yeah, Leon knows the stuff, that's for sure. And so then we can kind of get into the private market and make a distinction in there between venture capital and angel investing. I think I have that right. So, Jeff, would you feel comfortable kind of parsing out the distinction between those two?
Well, there are a lot of distinct differences, but from my perspective, again, I'm probably Leon and I play in very early stages of funding companies, and you'll find we look at that chart you mentioned, the continuum of funding for a business, starting from M&P money, which is mom and pop money, and a lot of businesses start out with M&P money. They build their business to a point where they need revenue, they need capital to continue their growth, but it's really hard to have access at an early stage if you don't have physical assets. Banks need security. They want to make sure you're going to pay the money back. And a lot of times the young companies don't have assets that they can put up for security. So where do you go to fund a business? You go to angel groups, angel investors that yes, they'll provide revenue for your capital for you to build your business. And they expect something in exchange. And what they get out of, instead of security, is they want equity in your business. Now, venture capital is going to be the next, if you will, the rung on the ladder going up a step. They will handle companies that are further along, usually post sales. So they're generating some revenue off sales. They're showing an upward trend in their growth and their financial numbers. Venture capital come in at quite a bit more dollars than angels will. So again, angels play in that space, that early stage that is probably the highest risk. Sometimes they call it the valley of death, probably for an appropriate reason. But that's why you expect good returns, and that's why the investors would want equity in it. Again, venture capital, there are many other differences. I think venture capital will pick up businesses again further on, invest in them for continued growth. They may hang on to it for a longer time. Angels, they get their money on an exit, so they're interested in getting in early and making sure that those companies get traction and that they can grow and they can get the funding that they need in the future, even when they grow beyond the ability of the angels to support them.
Yeah. Yeah. Leon, anything you want to add to that
I'd
distinction?
say Jeff mentioned that it's higher risk when you're angel investing.
Okay.
So when you say higher risk, what you really want is higher return. So those individuals should expect 18 to 23% return on their money versus a private equity, which will be some of the risk has been taken off by the angel investors because it's likely that the angel investors are the ones that have provided the funding that a private equity firm comes in when it's growing to need more cash.
Hmm.
And that individuals, that group of companies probably are making anywhere from 13 to 18% return on their money.
Oh,
Then you
okay.
come back to the stock market and their specialty niches, which will be, 8 to 10% of regular stocks, historically will generate that 10%. More in this last few years and a lot less in the years prior to that, but averages out 10%.
Okay. Okay. So you're saying in general, angel investing tends to be higher risk than venture capital.
Yes, but it also happens to be higher reward.
Right.
And that's
right.
where you can't look at risk in isolation,
Yeah.
because
Yeah.
risk is relative to a potential reward.
Sure. Yeah.
And angel investing, because of the area that they play in, that death zone,
Mm-hmm.
you expect higher returns, and
Yeah.
they do get that. So in a sense, I think, Leon, you've mentioned several occasions that it's actually de-risked,
Right.
because again, the compensation, the returns compensate you for those risks. And in the long run, it's a very, very good investment.
Yeah, yeah. Well, and not only that, but the due diligence you provide works to minimize that risk, and then the diversity that you put in your portfolio also does that as well, right?
Right. And don't underestimate. And again, we were talking about the value that angel investors can provide beyond the dollars.
Yeah, yeah.
So, the more horsepower you have, whether it's internal, meaning you hired them and you brought them on, or it's external as advisors and mentors and guides, the more that you can get on your team, the more uh, likely you are to succeed and to hit that home run. And again, there is an opportunity with young companies for experienced entrepreneurs, investors, to actually assist in that process and to provide that guidance and that knowledge, expertise, that they've acquired over their lifetime.
There's another dimension of angel investing that I want to distinguish from the group of angels. When you get the group of angels together, that group has more knowledge and information than anybody can have as an individual. And
Yeah.
that's the neat part of angel investing. So you have this group experience, which is probably experienced all the problems and many of the issues or related to those issues that an entrepreneur is going to fall into. So the group experience is really where it's at.
Yeah, I think that's a fascinating distinction between angel investing and, say, putting your money in the stock market. You don't have any direct influence over those companies in the stock market. Whereas with angel investing, you can continually, basically manage the risk with your experience and your expertise. I think that's a really fascinating and probably unsung benefit of angel investing. So,
And again, to make that point, that's why one of the first things we look at when we talk to an entrepreneur is, are they coachable?
Coachability, yeah.
Because if they're not coachable, they are walking away from all of that value that the source of your capital can provide. So
That's
it's
right.
not just the money.
Yeah,
Money is secondary to the value of the expertise.
Yeah, coachability is the catalyst there for the whole process, isn't it?
Mm-hmm.
So, thanks for listening to Angel Impact, the official podcast of the Wisconsin River Business Angels. To learn more about the Wisconsin River Business Angels, visit the website at www.midwestwealthventures.com or find us on Facebook.